All right, I believe we are live. Welcome everyone to Talga's first webinar. Hopefully, I understand over 100 of our 5,000 shareholders have registered to view this, and just to remind you, we will be recording this and we will look into distributing this in future. We'll also be looking into making this a more regular event to have more regular updates, and particularly one-on-ones, and try and make sure that people are more up to date with the news of what we're doing. So today, let me introduce the company and talk you through particularly the anode project that we're building, why we're doing it, and of course afterwards we're having Q&A live with your questions so we can get you up to date on that. So let's commence. There will be forward-looking statements in here. So we do have a legal requirement, just to remind you, to read the disclaimer at the front of the presentation. We have all reserves that we base these statements from, so that's okay, but just a reminder that today I do have to remain ASX compliant in everything we talk about. So Talga is now quite focused. I think we've got a very clear plan now about the project, the first major project we're putting into production, and what we do as a company. So we essentially are extracting the maximum value we can from our graphite deposit in Sweden, and we have determined that the fast path to big volume and very good annual revenue is through the battery anode materials. But we also are still letting the investments we've made in graphene are starting to pay off, and the commercialization of graphene is starting to mature as well. So we're going to have some news on that soon. Essentially, what we've done is found the shortest term path to a large scale revenue, but both branches, as it were, of the business are growing. Since being founded, we have, I guess, been on quite a journey on discovering the best way to monetize that carbon deposit. We now employ over 35 people plus contractors. This has been an investment in the R&D and in the product capacity of the company, so that we're downstream, so that we've got the technology, the ownership of the IP, but more importantly, that our customers are downstream and we're not just a raw materials company. That's a huge part of what we do. We've never been raw materials, and that's why our journey's been a bit different to others. So we have that vertical integration, which is very attractive, particularly with some of these large companies where we're dealing with now. And we control our mine, we control the processing, and we control the products to provide what is a very controllable supply chain, and a more profitable one. We capture all of those margins, and often the biggest margins in these products are right at the end. So let's focus on what we're talking about today. So this presentation is specifically around lithium-ion anode project. Whether you've got an opinion about CO2 and the sustainability of the world or not, the governments of the world are legislating the growth in batteries. So the growth in batteries is happening organically, as in that the costs are coming down, the product quality is going up, particularly in electric vehicles. The governments are legislating for less CO2 at the tailpipe, and also particulate emissions. So there is the growth in the battery market. It's not to be underestimated. Just because local media in Australia or because some commodity prices come off, people think that story is changing. It is not. From our discussions with customers, just came off the road in Japan and Korea last week, been over there several times in the last month. All their plans, all their rollouts are still going as flat out, as fast as possible. So we're still continuing to see massive growth, and this is underpinned by the legislation that's changing it as well. So I just want to point out that we like this business because it's a mega trend of growth, and that is continuing. Now, when you look at that market, outside China, the biggest market in the world for batteries is actually Europe. It's actually bigger than all of non-Chinese Asia combined, and it's bigger than North America. And the beauty of Europe is that their battery demand has to go from, well, it's already quite high, but it's increasing faster than ever. More governments in the EU zone are legislating for CO2 and particulates, so the battery demand for EVs in particular is a lot more robust in Europe than anywhere else in the world. And this is recognized by the Asian companies we meet with. They're all looking at Europe as being the growth market, not necessarily China, not necessarily America, or even our home countries. It's just because of the sheer quantity of people and the demand that's driven by government, and the fact that the whole ecosystem around sustainability is a lot more advanced in Europe. Now, on the battery side, they currently produce practically nothing, particularly for anodes. So the rule of thumb with anode graphite is that you need about 1,000 tons of graphite anode for 1 gigawatt hour of battery capacity. So in Europe, this calculates that they need to, excuse me, reach over 300,000 tons of graphite anode within 10 years from zero today. So currently they import all of their material, so that the current supply chain is natural graphite or synthetic will be made in China. It'll go to Japan or Korea for reprocessing. Some synthetic is made in those countries as well. That's sold to a battery cell maker in that area. So the battery cells then leave either China, Japan, or Korea, and they come into Europe. Currently, what's happening is the world's largest battery makers and car makers are getting together to set up a supply chain for batteries in Europe. So us being located there, right next to these fast-growing factories and fast-growing demand for this product, is a massive benefit compared to being in Australia, Africa, Asia, somewhere else. It's fantastic. These guys do not want to rely on a Chinese supply chain going forward. They want local. And if you look at local within Europe, your graphite stocks, we own the largest as well as the highest grade graphite resources in Europe. So we're perfectly positioned for that. And in fact, when it comes to one of the largest factories is being built in Sweden, we're only 1 hour's drive away from that factory in Sweden, which is being set up by Northvolt in joint venture with Volkswagen. Down in Germany, where our pilot plant is, CATL, the world's largest battery maker, is setting up a factory there that will also possibly end up being the largest in Europe. That's half an hour away from our pilot plant. Location counts for something. It decreases the transport logistic cost. Also with batteries, people say, oh, look, transport is no big deal. When it comes to cost, that may be true. There is a cost, but people are forgetting about the regulation of transporting batteries. You're not allowed to put giant pallet loads of batteries on planes and things anymore. Even on ships, there's new regulations coming in. They have to separate those into smaller and smaller shipments. So there's actually a higher cost than you think for transporting large amounts of batteries and some of those materials. So being closer to the demand is a big advantage for us. So today we're not talking about the graphene. I'll discuss that a little bit in the question time, but specifically Talga's anode project. Essentially what we're doing is setting up to be Europe's first lithium-ion anode plant. So 19,000 tons of anode production from our refinery in North Sweden. It's in a town called Luleå, out at the port there. And this anode refinery purifies and reprocesses our material from our mine and a concentrator. We would build at Vittangi. So mine and concentrator up country, concentrates just 2 trucks a day needed to come down and run the refinery and actually put out what is nearly $200 million of revenue. So it's an integrated project, and most importantly, it uses the local grid power, which is hydro and wind. So you have a very low CO2, great power supply. That's why our neighbors in Luleå, our large corporate neighbors, include Microsoft, Google, Facebook. They're all there because it's a cheap place to have server farms. So there's over a billion, literally billions of people's details on server farms in that area, taking advantage of the low-cost power. So let's look at where the refinery is. So the local government, the municipality, is developing the site into a heavy industrial site next to the port, where there's already an existing steel mill. So Sweden already does downstream processing. They use the iron ore comes out as a concentrate, and they process it into steel. They have copper mines, which they then process into copper at the smelters. And this essentially is a battery version of that. We're going to have a graphite come out of the ground. It's going to be turned into lithium-ion battery anodes down in this area. Using the low CO2 power, it's a modest amount of output. And we're going to put, what we actually make is called anode. It's not called graphite. It's the final active material. It's a coated product. It's competitive with synthetic graphite, highest quality that's coming out of Japan and Korea now, and we would actually set up the refinery there. And we can be in construction by the end of 2020 on that. So to go back into what it is exactly that it makes. So people are a bit confused sometimes about anode. So when you have a graphite concentrate, a raw concentrate, that's what people would call flake graphite. That's what you would see a lot of resource companies make. Then you might see some downstream adding processes like spheronization, which is where you shape the particles. and you have to purify them to very high purity to qualify for batteries. That's actually only halfway. So in the battery industry, that material, spheronized uncoated, is still called graphite. It's actually still a relatively raw product. And from there, it needs quite a lot of processing to get it to the final active material that you sell to a battery maker. And here you can see in this illustration, what looks like a black powder is actually the highly refined anode material, Talga C, and they can mix it with a liquid and pour it onto their current collector. So this is what it looks like in effect. Here's one of our little test batteries. We've done pilot line work on developing our anode material, and inside you have a cathode, you have an anode, and coating this black coating. So half of the lithium-ion battery is the anode. So it's quite a big volume. So while everyone's looking over here at the nickel and the lithium and the cobalt and manganese, on this side is always graphite. And there's almost no technology that doesn't use graphite anode for the lithium-ion battery. Now that's a pouch cell. If you roll that up into a tight little shape, you get what you would be more familiar with, which is your cylindrical cell. So half of that all wound up is the anode, and we make that black material, the active material. So we make the final product we can sell to a battery maker. Our product, Talga C, shows amazing performance at low temperature. This has been verified by one of Japan's leading battery institutes that does work for all the large car companies. We have high power, we have fast charge. This material is fantastic. Why is it different to everyone else? Well, it's a different deposit. The deposit formed differently in Sweden. We have processing technology to retain those performance characteristics. We've done a lot of work over the last several years to make that, and it basically competes with synthetic material, not with natural. So it's a product that it doesn't really matter whether you're calling it natural or synthetic. It actually can be priced based on its performance, its amount of energy per unit of weight, rather than just calling it like a raw product. So where does that put us in the supply chain? Well, it actually puts us up where Hitachi are, who currently buy Chinese material and reprocess it. That's in Japan. In Korea, you have groups like POSCO do the same thing. Their supply chain currently is ex-China. They reprocess and then they'll sell it to the battery maker. In China, they're a bit more integrated. You've got groups like BTR. So then you have synthetic makers like Shareholder, for example. So we're one of them. Essentially, we would become the European anode maker. And while that sounds like that's a pretty tough competition, at the same time, there's opportunities to do partnerships and to grow the business in conjunction with some of those groups as well. So we've got opportunities to both grow the business organically and to partner up to make that go faster. But the point is, we are way downstream from any other resource company. Even other resource companies that talk about battery anode materials are not actually making battery anode. They don't make the final product. They still make a semi-processed product that gets worked on by someone else. They don't have the coating technology. They haven't invested in their in-house technology to make that happen. And actually, that's quite a barrier to entry. We've been building our team for some years now. We have people that used to work for Tata, for Toyota, for Dyson in our team. So it's quite a barrier to entry in some ways for them to do what we're doing, regardless of their claims that they're making anode material. On pricing, therefore, our product price is actually very high. It sits about mid-range between the lowest of natural graphite and the highest of synthetic. This was actually a heavily discounted price that was determined by Benchmark Minerals. Certainly, I can't say much about it, but depending on the volume, this pricing is something that we still see being active in the market. The important thing to realize is that our cost is so low. It's so low that even we are very profitable even at an uncoated price. So our resource is very high grade. We have over 12 million tons at 25%. In the PFS we published earlier this year, we only converted about 2 million tons of that into an ore reserve. For those of you that don't know anything about Sweden, we do show this on the road. People don't realize Sweden is a very big mining country. They have very high productivity. They have big open cut mines. This one is actually not far, just down the road from us. This is at ITIC, does 36 million tons a year. And then it's a very innovative and low cost sector. The ore grade of this particular copper deposit is about 0.2%, which would not be economic anywhere else in the world, but it is in Sweden. So while some things are expensive, actually operating costs over there can be very, very low. This is in part due to very low cost power. Not only is it low cost, it's very low CO2. So you have a very highly sustainable power source. With us, our ore grade is higher than anyone else in the world, super high. We've got a plan for a relatively small footprint mine development, which is only 100,000 tonnes per year, and yet that's 22 years of development. So we've got a huge amount of room to grow. 22 years mine life based on just 1/6 of our current resource base. When you look at our grade, our resource grade is still miles ahead of anyone else. We have about 30 to 40% more graphite per tonne than the second and third type companies, and we're far and away, we're about 5 to 6 times the grade of the average in China, for example. Probably more importantly, when it comes to making a battery anode, is our yield rate is super high. Because our particles are uniquely sized naturally for battery anodes, we have extremely high yields, whereby liberating the graphite flakes instead of crushing them down into small particles, we actually, instead of reducing their size, we actually liberate them. So we have really high yields, in fact, 30 to 40% more. In addition, from Vittangi, all of the product is battery anode. So we have no fines, we have no basket price of other industrial materials we have to get rid of. We have 100% of our material goes into anodes, and we have the world's leading yields as far as we're concerned, much, much higher, about commonly double that of Chinese material, and often 30 to 40% higher than other companies. So when you put this together, the super high grade deposit, the really low cost power, really high yields, and all anode material, this actually gives us a cost base that's second to none in the world. We're actually competitive with China. We could export material anywhere in the world and be competitive. And so this is the point we've got to. This is what the work has been towards confirming it and getting set. And this puts us in a fantastic position for growing this company. We have a plan, multi-stage development to build so that we keep the capex small as we can in the early days. We currently have a pilot plant that we are looking at expanding into more Talnode material, the graphene material, and we need to start selling that product. We need to be expanding the volumes of that to customers, and we need to just continue that ramp up. This is a responsible way to develop the project. It's not just planning some giant volume of material that can just dump into the market. It's actually ramping up with our customers. Performance-wise, fantastic. You can read all those numbers. Very high margin, just under $200 million a year in annual revenue. Very high. But I'm sure that you see a lot of impressive numbers from lots of people. But I do want you to keep in mind that our cost base makes us competitive. All sorts of, any sort of pricing you want to use, it's still usually a product price that's about double what our production cost is. The timeline also you would have seen previously in the presentation. Essentially, we've got a financial investment decision due at the end of the first quarter. We've just put in our permitting for the mine for stage 1. That went in actually in August. We're expecting permission for that hopefully by Christmas. If not, it'll be early in the next quarter of the year. And that essentially is going into production for mining next year, stage 1 mining, and building the refinery by the end of next year. So again, responsible stage production to match the market and match the material entering the market. For those of you that don't know, highly refined products like this, a product versus a raw material, it needs a testing process. So the big difference between graphite compared to lithium and other things in the battery is A, it's not a metal. B, therefore it's not sold on just a purity basis. It's not even just sold on a spec. 3, it actually has to be physically tested in the battery for them to decide if they like it. And for that, they need a growing volume of samples. So currently in the 10 to hundreds of kilos range, they need in the hundreds to thousands of kilo range now as they scale up. So you end up doing small little testing coins. By the end of the testing process that we're in right now with a whole bunch of customers, up to 40 of them at the moment, they end up making literally cars with batteries in them and smashing them up, shooting nails or bullets through the batteries to see if they explode, things like that. So they test the heck out of these things before they'll give you the orders and the offtakes we need to underwrite stage 1. So where we're at right now is very much a marketing stage, is qualifying the material with customers. It's not like just a raw material, sending them a little baggie and they muck around with it and they're happy. They literally physically build batteries, and then they build more batteries, and then they build bigger batteries, and they scale it up. We have to meet that scale up. We have to invest in actually expanding our German facility now to make more samples for that, which will underwrite the offtake agreements, as I mentioned earlier, and to continue the work towards the DFS, which will enable the financing for stage 1 to commence. This also will give you all the offtakes and the commercial deals you guys want to see and which we need to actually build a project. Applications already in for that. Parallel for stage 1, we're actually putting in stage 2 as well, but that's an ongoing parallel, and that's very, very well advanced. The DFS is underway. We're targeting everything coming together by the end of March for that decision. Project finance well underway, meeting a bunch of different banks. More importantly, of course, you'd like us to fund this with customers, right? So there's obviously the best options for funding the project, and there's the less ones we like. We're focusing on deals we can do, offtake-based deals. We're working with trading groups and customers on that. At the same time, we're parallel working with banks, private equity, and of course, we have to look at the whole range of our capital needs, both from the company and in the project itself. So let me wind up the presentation there. What have you got? You've got a company that's now very focused with an executable plan to go into production. It's a deliverable plan insofar as that the financiers can analyze this a lot better, a lot easier, and make decisions. It's pretty low cost too for that to be built for what we're doing. It fits into this booming market, fits in with the European supply chain. It meets sustainability goals. We're the first and largest group that would make something within Europe. We're getting a massive response from the people that we're meeting, from the companies we're meeting. We're very, very heavily engaged with a lot of the companies you'd love us to be engaged with that you would think would be logical. We're going to keep capitalizing on different generations. So you would have seen our solid state news. We've got silicon product for next generations are still available for us. So building value into the company this way. It's a greener, more secure supply chain for our customers. They really like it. And we're poised to do those deals that you want to see and that we need to put this into production. This photo is actually one of mine the other day up in Korea, just looking at 12-lane, 20-lane highways, looking at their pollution, looking at where they're at. And it's really good to be honest, to be part of the answer to what a lot of people are trying to fix, problems they're fixing in cities like that. Market cap these days, still up around 90 million, still pretty good on Australian context, over 5,000 shareholders now. Cash balance last quarter, 7.7. We'll talk about the cash burn and the needs of the company. You would have seen Andrew Willis come on in the last quarter. He's director of Palinghurst. I'm still the second largest shareholder, still got directors with skin in the game, and would like to get some more, frankly. So yeah, you'd notice that the top 20, over the last 3 years, our top 20 went from, I think, 35%, a year later it was 45%, today it's over 50%. So to be honest, at the top end, even though it's a bit hard to work out with all the nominees and so forth, in general, you've got continued support, very stable investment in the top scale. The retail tail obviously get affected by the market, somewhat by the macro. But we've got very solid interested parties who are loving this plan, that are loving the clear pathway that we've got. We've just opened a new office, so we've got 2 offices in Sweden, Y2, one's in the seat of government, and the other one is our local seat. So it's for local people, local landowners and stakeholders to get access to us. We've got the pilot plant in Germany, still going great. The technology team in the UK is absolutely vital, tapping into the Uni of Cambridge, tapping into the ecosystem there, cheap resources for accessing equipment and things like that, and of course our corporate office here. And I think that's all we've got time for. I'll leave this slide up while I get into, I'm sure, what will be a list of challenging questions. All right. Got Shane here's going to read out the questions. I can't see them from here.
Yeah. So. All right. Thanks, Mark. We'll start with the ones we received in advance. And just a reminder to anybody on the webinar at the moment, you can submit questions through the webinar software. You just click the question button, you can put one in live. And we'll move on to those after the ones we've got in advance. So, Mark, the first question is from shareholder Michael, and it says, Tesla says it uses synthetic graphite. Can Talga's new graphite-graphene anode be used in place of this synthetic battery, or will Talga's product have to compete against it?
Yes, we actually can essentially compete with that. So synthetic, currently, most EV batteries are a blend of synthetic and natural to get the properties that they want for the product application. And a small vehicle is different to a big vehicle or a van or a truck. So there's very different requirements and there's different blends. The battery company does those for their customers in auto. Specifically on Tesla, they do use a very high amount of synthetic, but they're using an increased amount of silicon, we understand, and this is known in some literature. And there is also a shift to more natural. So I can tell you that the industry trend is actually displacement of synthetic with natural. Why? Partially it's some of the properties that we're getting, but it's also because of cost. The natural tends to be a lower cost. Synthetic takes a huge amount of energy. It's literally multiple weeks at over 3,000 degrees centigrade to make synthetic graphite. So there's a cost base that they can't get under. If the natural material can come in slightly under that cost base, it lowers their overall cost for their product. And car makers are, especially big ones like Ford, very, very cost conscious. So as Tesla reaches down in their Model 3 and looking down into sort of not just their Model S and their higher end cars, they're looking at cost reductions as well. They're looking at scale. They're looking at markets like China where the cost maybe has to come down as well. So our understanding is that most of the EVs are actually looking at greater increased amounts of natural. Our material, Talga's Talnode, is very high performance. So it actually is a very good fit for blending for an EV battery. And what can I say, except that some of our customers, you would assume, are doing just that. So that is probably an entry point, is displacing synthetic into some EVs, replacing both natural and displacing some synthetic at the same time. But our material is entirely compatible with that. Yeah.
All right, thanks, Mark. So the second question we have is from shareholder Malcolm. It's a two-part question. So I'll start with part one, which is any work being done currently to update the JORC resource for your graphite mineral resources and ore reserve?
Yeah, recently we drilled and made a major discovery at the Niska prospect, which is part of our Vittangi graphite project, and really it's an extension of the strike of the ore body. Look, all I can tell you there is that the resource, the maiden resource for that will come out soon. We've never been one to overspend on drilling. We actually keep it pretty tight, and the continuity of the ore bodies is very high. So we always minimize the spend on the drilling and just develop really enough for what our plans are in the short term. We don't think there's a benefit in publishing hundreds of years of resources, but they are actually big enough for that. We have published JORC exploration targets that show upwards of 175 million tonnes or more of targets. And currently we've got over 40 million tonnes of resources in total amongst our projects in Sweden. So it's not so much about scale, but yeah, we're very excited to bring to light some more resources in Vittangi that may have different grades that will probably, no doubt, metallurgically, based on what we know already, are exactly the same, can go into the same process, can potentially have an increase. So if we want to increase production, we're going to have the resources to support that. That's why we're developing the Niska resource at the moment. And there'll be some news on that pretty soon.
All right, thanks, Mark. The second part of Malcolm's question is, it would seem a logical step to list Talga on a European bourse, as European investors may think twice about investing in a company listed on the other side of the world.
Yeah, so for a long time now, I mean, we've been in Europe as a project, obviously, for a long time. And every year we get asked by shareholders that are in that space to look at coming over and listing there. We review it almost every year, what the costs are, what the latest changes in the legislation are, what markets, where would they be, should we be in Sweden, for example, to have that local content, but then the volume isn't very big, the liquidity is not very good. Could it be London? We already trade sort of over the counter in Germany, both on the DAX, but also Berlin and Stuttgart. We trade in the pink sheets in America. We're specifically with the European bourse, look, we've always said that if there was a liquidity event, a large scale event, it may be worthwhile moving and doing a dual listing over there. It's just something we review regularly, and we're reviewing it again now, I guess, at a time when we're developing the project, and maybe that makes some sense. But we'll let you know when we're, if that's going to be the case.
Thanks, Mark. So I've got questions here from shareholder Rod and John C. Johnson. who are both asking very similar questions with regards to funding, debt funding, potential capital raising, and the potential impact on existing equity holders. So perhaps if you'd like to just comment on funding strategy for the project.
Okay, yep, big subject. So, yep, we've been onto that straight away. Once we had the PFS out, was triggering a range of relationships that we'd already set up that would be funding related. I guess there's always a vista from the ideal way to finance the project and the less ideal ways. So, of course, we're exploring all of them with a focus on the funding that could be via customers, that could be via prepayment of offtakes and things like that. So we are currently engaged with a range of parties that include from customers to trading houses to banks, looking at the full gamut of funding opportunities that there are. Now, the first stage one, the capex is 27 million US. It's actually not large enough for some groups to want to do anything. They want to look at the whole thing, including stage two. Our idea by staging it was that once in production in stage one, our opportunities for how we fund stage two, which is a lot bigger, would be better terms. There's very, very low cost debt. There's opportunities to do things in the Eurozone. There's funding opportunities there, similar to what Northvolt tapped into. That is the sort of thing that we would target as well. So I guess all I can tell you at this stage is we're doing what would be logical to do, looking at the best ways, but at the same time, going down the chain, looking at debt finance and things like that. And that's why, in some ways, you have to do a DFS if you're going to use bank finance. If you're not going to do bank finance, you're going to do a deal strictly with maybe trading houses or with a customer or customers, then you don't necessarily need a DFS. So we sort of have to invest in that anyway to cover our bases. All I can say is that we're working very hard to make it the best deal possible. We don't need to finalise that really until the first quarter of next year. So it's just an activity that's underway.
All right, thanks, Mark. Now, I apologise for the next question because I'll no doubt pronounce his name wrong, but it's from Sverker. The first part of his question's already just been answered on the financing strategy. Yep. So the second part is, what are the potential problems or obstacles that you face with graphene or talphene commercialisation? And does your product quality vary between batches?
Okay, so that's more of a graphene question on our, yep. So to be honest, the only issue around commercialisation of graphene is speed. We've shown the material works very well in a range of products that we've targeted, which includes batteries, by the way, but obviously we've covered concrete, plastic composites and coatings. These things are maturing. They just are maturing a bit slower than we want. And batteries are a current market that we can get basically in a production. So our idea is essentially to develop the project on the batteries as the graphene commercialization does mature, and we can currently feed that, supply that we need from Germany. When it gets too big for Germany, then we can add a module to Sweden. So up in Luleå, the refinery, we would actually add the graphene production capacity when it's warranted. But in the meantime, the project and everything behind it would be built, financed, and be highly profitable on the battery materials. So they're coming along. So I don't really see a specific problem if you do what we've been doing, which is with our own technology, integrating between the customer and the product tech is that investment with our tech team. So I think we've gone about it the right way. It's just that new products, new material going into products take longer than we estimated and longer than the market likes to fully mature. Ironically, some of our products are actually getting pretty close now, quite advanced stages at the same time as now we're pushing ahead with the battery project. But that's great. They can coexist. And I'm sure basically what the timing is by the time we need large production volumes of graphene material, we'll be able to build that capacity up in Sweden next to the anode plant. Was that the whole question, or was there a second part to that, apart from commercialization? There was variability between batches.
Yeah, that's right. Yeah.
Not really. It depends. Depends on how you do it, but not really. No, variability isn't really a problem. There is a lot of misinformation out there to do with in the graphene space, things to do with variability or flake sizes, and there's no one that's really published anything in a lot of detail that answers those. Another one is about shelf life that came up all the time. Is that other materials, over time drops out of solution. You only get 6 months shelf life. I can tell you that there's a jar here. If you don't mind, I'll show you. This has been, I haven't touched this. This has been here for over 2 years now. Let me see. You can tell how unscripted it is because of my ugly turn here. You see that black liquid? That's graphene dispersed in water. That's been there for over 2 years without being. It's probably the first time someone's handled it. It's still dispersed. It hasn't dropped out. Shelf life isn't a problem. I mean, that's a classic example of some of the misinformation out there. Of if you functionalize it properly, if you know what you're doing, if you own technology in that space, no, you fix all those things, of course, as part of your commercial development.
All right, thanks. So this is the final part of the questions from Thurka, which is on some of the non-core things. So he's asked about cobalt in Kiskama and vanadium.
Oh, yeah, okay. So we moved to Sweden initially in late 2011, pegging some of our own projects, and then we bought a company from Tech, Kaminko, and they owned cobalt, copper prospect and iron ore project, and also subsequently we pegged some ground for graphite that turns out that's got a very, very exciting vanadium prospect on it. So these non-core projects we talked about a while back, we partitioned them away from the graphite, put them into what would be called a battery metals company, and we were excited to look into spinning those off. But commodity prices dropped, market conditions changed, and so the opportunity to spin those off has altered. So we do work on them. Our strategy is to, at minimal cost, develop them and advance them to the point where we can add some value so that when they can be sold or joint ventured or spun off, they can make some real value for Talga. So our intention is to look for partners to develop those projects. It's not obviously going to be our core business. The cobalt we did do a resource on recently so that it could support those discussions and add value to potential spin-off or sale of that project. The vanadium project is actually very, very good. Really like that project, but yeah, it's too big for us right now with our current activities. So that's something that we might be able to spare some time for over the next 12 months. But it's more likely, I think, another partner will come in next door and maybe we can do something there. And we've actually got 250 million tonnes. We've got over 240 million tonnes of iron ore resources as well, which we're looking to deal on as well now that iron ore prices are up a little bit. And now that, in fact, if Sverker is, if I'm correct in assuming he's from Sweden, LKB, their depth extensions may be at risk with Kiruna, and so coming up to the surface, iron ore resources in that area become more valuable. So yeah, that's an area that we'll pursue as well. So we're trying to add some value. We're trying to deal on them as the market lets us, basically.
Thanks, Mark. So the next question is from Bruce. He has a series of questions which are really related to offtake agreements. So he's very happy with the grades and the country you're operating in, but yeah, would like to know why are there any offtake? Why haven't you been able to sign any offtake agreements yet? And a similar follow-on question, which is why isn't a large battery manufacturer or end user interested in the company at this stage?
Okay, regarding offtake, for a start, we're selling an actual product, not a raw material. So you tend to have supply agreements. They can be called offtakes, I guess. But the point is, there's quite a period of time of testing. Telnode C, we only announced the first results of it around mid last year. So in a relatively short period of time, it's actually come a long way. And that material is now being in the hands of the world's largest battery makers, massive electronics companies, massive auto companies. It's really up in that supply chain. And those deals will come. That's what we're working on getting. But it's a bit slower to do because they have to qualify the product to go into their final battery. It's very different from selling a semi-processed material to a trading company that gives you an offtake. May or may not be worth the paper it's written on, but you're certainly seeing issues around those deals and what they're worth now. But they're a trading company and they can just sort of make any commitment they want. They're not really held accountable for it. Also, our end users, they're not just trading houses, but they're actually pretty large companies looking at pretty large things. So they just take time. So we're expecting to, over the next 6 months, finalise those for Talnode C. And it's the same for the other products as well. They're actually all in train. So it just takes a little bit of time. So that was the first part. That was on offtake, wasn't it?
Yeah, and the second part was why isn't a large battery manufacturer or end user interested in taking over the company?
Well, they may well be, but it's not my job to speculate on too much on that. Again, matter of time. These guys have only had this material for a short while. Some of them have had it long enough that they're getting results back, and we've got very positive feedback from that. So there's a bit of a loop happening on that now. But I would say it's just a matter of time that they get convinced about something. What their plans are, we can't speculate as to that. We'll see what happens in future. We'll deal with it then.
And the final part of Bruce's question is, how can you get the share price up?
Well, again, the share price will tend to do whatever it is. We ourselves have only been, in our minds, just creating value for shareholders. We've been building maximum value from the tech to discovering the best way to extract value from the resource, for then the best way of processing it in the greenest and lowest cost possible way, for finding markets for it that are more current, that are large volume, that are growing fast. That's all what we focus on, is building what essentially is a great business. And that, I would say, since May, when we published the PFS, and now being on the road explaining more about what we're doing, maybe people can now reassess the value of the company. But of course, we operate in a macro environment. We're surrounded by other companies that have issues, other macro things, but our job is, we're very focused on continuing to build the value. It will come in the share price. In the past, when people have had a similar sort of question, the next month or two we do a deal with someone or something happens and the share price doubles. You'll never know when we're about to crack open exactly what you want to see happen, or the validation and the deals you want to see. They could happen at any time and change the value of the company in your eyes. The value in our eyes is very clear. This is a sensational company, sensational assets. So that's what we focus on.
So the next question, I'll actually join two together here. We have a question from Chris, which is how are things progressing as respects to your work with potential customers to develop better polymers and coatings with the use of graphene? And then a similar question from Peter, have you considered other possible uses of your graphene products?
Okay, so it's a little bit hard for me to tell you, give you an update without obviously the releases that need to be done first, but I can tell you that we have some very advanced, we're at a very advanced stage with some very large scale applications. We have previously told you that we've got an MOU underway with, deal underway with Billerud-Korsnäs, a giant Swedish paper and fiber cardboard company. We haven't told you it's not happening, so you should assume it's still happening. So we're very happy with that relationship, and we're very happy with the product, the application. Separately, we've talked about coatings. Some of those things, coatings have to be tested for a while. So some of those things are maturing as well, quite well. We've announced deals in the past with some companies in that space as well. So all I can really say at the moment is you'll have to watch the space. But what I can tell you is we're doing a lot less. It's like a funnel. We've had to look at lots of different products, lots of different companies, and I can tell you that right now on the graphene side, that's narrowed a lot. We've chosen just some key groups, some key products. We've worked out the chemistry and the product and what it's got to do. We've simplified it, and that's freed up some of our resources now to grow our battery business. So on that side of things with the polymers and those things, they're maturing, and we'll give you some news on those. Some of it will be very soon. The second part of that was?
Again, product diversification with graphite and graphene.
Have we considered supercapacitors and things like that? Yeah, so look, obviously one of the issues with graphene is it can go into almost everything. So you can affect everything. It's very hard to focus on. You have to have good reasons for focusing. So yeah, we regularly see and reject things that we read about in the media that other people are doing. And we've looked at those markets, we've studied them over the years, and we don't want to do them. We focus on the near-term ones, the best volume ones, the most closest to market opportunities. so specifically say for supercapacitors, for example, there's a lot in the media and in the literature about supercaps. We looked at it in the early days, we actually built something, works great, but when you look at the volumes compared to other types of battery, it's not so big. The main problem we've got is that in practical terms, when you finish the product, the performance increase over incumbent materials, which are really cheap. For example, active carbon materials that are made from treating coconut husks, they're pretty cheap. So you're going to have a fairly expensive or trying to get a very high margin for a product versus a very low product, and the way that the supercapacitor works may not necessarily be that much better. So we just sort of see some barriers in that business, so we choose not to be in it. It's not because we can't. To be honest, a lot of these products we've already made or prototyped ourselves, and we've decided from talking to world experts not to do them. But we review this all the time, and when we see something that we think is not just newsworthy, but from a business point of view, has got that right blend of volume and speed to market, things like that, we'll do it. But that's why we focus on coatings, concrete, polymers. They're the big volume current materials, and the stuff we're doing is not the stuff in the media. Yeah, anti-corrosion paints, stuff like that. It's not headline grabbing, it's not high-tech stuff, but it's big volume, and that's why we focus on those.
Thanks for that. So I've got a question from shareholder Sam, and it's about the strategic focus of the company.
Yep.
I've been a long time shareholder of Talga. I've seen its potential many years ago when it was only a 10-cent stock. Over the years, the story seems to have become confused with multiple changes of direction. I understand the company is reacting to what it sees as valuable opportunities, but from a shareholder point of view, I'm concerned we don't seem to be getting any closer to achieving cash flow.
Yeah, okay, good question. Okay, well, I'm disappointed. I've obviously done a bad job if you think we've had multiple changes of direction. Really, since we've been in the graphite business, we've been focusing on getting the best value per ton out of it, essentially. When we had a breakthrough with graphene and the graphene product side and building the team to do that, that made the best sense. But when we discovered we can make the battery material, we're doing that because it's executable, it's faster, significant revenue. This is a plan now that's very, very clear. Whereas graphene, we relied on the customers. For this, we're more relying on, well, we can just put it into production. So it's more in control this way. You've got to remember that these aren't all different things. There's a synergy in how we manufacture the material. We can take the same block of ore from the deposit and turn it into graphene products or graphite products using very similar processes. There's a lot of synergy. Currently, we're using a lot of the equipment we built for the graphene is currently being used to make Talnode C. So to us, these are just advanced carbon materials that we've worked out how to liberate from this ore, and that synergy is a wonderful opportunity for us. As for a change of direction, well, we did a scoping study based on graphene predominantly back in late 14, and in early 19 we did our PFS based on anodes. In between, we've been mining. We went trial mining. We built a pilot plant. We built materials and the team. We built the products themselves. We've actually set it up and have created a miniature working version of the whole thing. Now, as you say, we need to head towards sales. We've had some small sales of graphene. It's not material, I grant you, but they are starting. We've got a full-time sales, essentially a marketing manager and a sales manager now. They've just come on in the last year, and the very, very long list of products and customers is now at a stage where it's all about the potential revenue from each deal we can get and choosing which ones we focus on, and they're all in some sort of part of that, what you would say is more of a sales and marketing process. So it is very much around marketing right now of the products. You have to make that investment to have this sort of scale. You're not going to get multi-$100 million a year revenue from just clicking your fingers like in a raw project and just projecting it all. We have to ramp up, we have to scale up into it. So look, I grant you it hasn't gone as fast as you would like, or that you might find the terminology behind some of these products different or confusing. That's my bad for not communicating that better. But in reality, we're just making different sized and shaped graphitic carbon particles for different products. And I think now we've unlocked the code, we've published our study, you can see exactly what we're going to do now, and that's what we're building. So hopefully it's clearer now than it has been at any other time.
Thanks, Mark. The next question is also from Sam. He's asking whether the current US-China trade dispute will have any impact on Talga and any potential further future impacts.
Oh, that's a bit big in Politico, but I can tell you, look, I don't think there's a specific impact, but I would say that overall, it's definitely not negative for us. I know there's fluctuations in the market and world trade, which are not good, but what I'm hearing on the road from everyone that currently is getting material from China is they are interested in having a non-Chinese supply chain. So the way it's working out is that I think it's reminding people about the strategic importance of having a supply chain that's either diversified or close to home and under control. And so I think that actually things have actually swung in our favor that way. It's made it more higher, it's a higher importance in people's minds in the companies that we're talking to. So at the moment, it's a positive. We don't have a plan that involves selling to China. We sleep well at night knowing that we don't have a business that relies on large volumes of anything into China. If we sell material there, great, but certainly we're expecting that 100% of our material does not have to go there, so that's no problem. Likewise with North America, we may or may not sell to North America, not a problem. We have other markets to focus on closer to home, and they are the biggest and fastest growing ones anyway in the short term. So,
thanks, Mark. The next question comes from Rob, and just before I read that out, a reminder everybody that if they want to submit a question, they can do so through the webinar platform with the little question mark. The question from Rob: how much faster is the recharge time using Talga graphite compared to batteries that don't use Talga graphite?
Yeah, good question. So there's different ways you test these things, and we've also got different products. Talnode C is our current product. It does show faster charge characteristics. It depends on how fast you actually charge it to see it compared to other anode material. All I can tell you is that we are seeing, and we're also seeing the feedback from customers that they are seeing similar effects. So it is faster than competing materials. However, you may be referring to a product that we published some results of last year, which is what we call Talphite X or Talnode X. Talnode X is a particularly fast charge product. It can charge from 0 to 100% in 3 minutes. So our test work was done at 10C, which is the charging rate, super fast, way faster than anyone else goes. So that product outperforms synthetic. It outperforms pretty much anything else we can see based on an anode. I can tell you that there is a trend towards faster charging. It's not 10C, that's not commercial yet for a lot of charging infrastructure. But there are a lot of people now that are charging instead of at 1C or 0.5 of a C, they're charging at 2C to 5C. And so fast charge is actually becoming not just a marketing term, but a requirement of battery makers that fast charge is a part of it. So our material having a natural advantage in that it naturally wants to go fast, and the way we process the material to retain that makes it look like we've got higher performance material, which is either potentially getting higher pricing or is more popular. So yeah, I think we've got some advantages that way. And the quantification of that, you just have to look back at that ASX release to see some details, and past that, there's a bit of a lecture on it. But yeah, we've got advantages, and it's becoming more important in the market, particularly as Europe shifts to probably heading towards an 800 volt sort of system overall.
Thanks, Mark. So the next question comes from Matt, and this might be commercially sensitive or confidential, but are you considering a concession application also in the Niska area?
Well, I think we can say we're considering it. Yeah, so the way it works in Sweden is that the tenement boundaries are actually very important. You can't just overlap and have mining concessions or exploitation concessions anywhere you like. They actually have to be within the tenement boundaries. So our current PFS is based simply on the southern Nonosvara part, the northern Nonosvara, which hosts the North Nonosvara resource, which is about 2 million tonnes of indicated at close to 30%. And the new Niska discoveries, they're on a separate tenement, so they would need a separate exploitation license or development sort of plan. I guess all I can tell you is that when the resource is finished for Niska, the maiden resource, we will look at and review whether that is worth having as a separate development or as a linked development into South Nordsvara, but that's just something we can consider, of course. I can't tell you that we have a specific plan to do that.
Thanks, Mark. We're actually very close to the finishing time at the moment, and we've got, oh, hang on, no, we just had one late question. Let me just check. No, finished. So the question queue is empty at the moment, and we're very close. So I don't know whether you'd like to just head for a conclusion.
Look, I guess I'd just like to say, look, thank you all shareholders for coming along on the ride today. I hear it's an amazing variety of, when I meet people, there's so many interested in some specific thing we're doing, from a battery technology to a graphene technology. I just hope that people can see that there's so much we can't talk about. There's reasons for us being so positive. We look forward to this sort of normalizing, I guess, over time, that we can share as even more. Certainly, we are going to be working harder than ever now. We've built a lot of the business right now. We want to share more of these results with you. We want to release more details about what's going on. So keep an eye out for as much as we can possibly share in the short term. And I just think it's a very, I'm more excited than any other time, I think. And actually, we've got a lot to be proud of. If you knew what was going on entirely with where we're at with the products and the customers, we've actually got quite a bit to be proud of. So very, very excited going forward about what we're doing. And I've enjoyed today, and hopefully, look forward to doing another one pretty soon.
Thanks very much, everyone, and that will conclude the webinar.
Thanks, everyone.